You know what time it is. It is the closing bell at the New York Stock Exchange.
That's right. Happy people. And this is why the Dow Jones closing the day up. Numbers still settling here, but certainly gaining more than 520 points. The S&P 500 and the Nasdaq also ended the day in green territory. Let's take a look. The S&P is up nearly 2% and the Nasdaq is up about 2.5%.
Lori Bettinger joins us now. She's the president at BancAlliance. She was also the director of the Troubled Asset Relief Program during the Obama administration. Lori, thanks so much for joining us. So what do you think was driving the market today?
Well, I think that investors were looking at a number of factors, right? There were some earnings coming out from, some of our country's largest companies that seemed to have a more positive spin than perhaps in, some prior months. And then also, we saw these GDP figures come out and we still had positive growth in the first quarter. And if you look into that, maybe like January was a little bit stronger than February and March, but we're still seeing consumer spending hold up. And that is such an important part of our economy, that consumers still have confidence and are making purchases, going out to restaurants. And I think that's continuing to maintain a pretty strong economy overall.
And it's also the head scratcher, right? So if unemployment is up, folks are losing jobs, they still have money to spend. GDP is up, but not as high as expected. How does all of that kind of shake out the concept of what happens next with either interest rate hikes or where we are in the economy? Are we closer to a recession? Are we in one now?
First of all, I don't think we're currently in a recession. It's hard not to always look around the corner. And I think, even today, if you were reading about, hey, we're not in a recession now, there was a lot of commentary about, maybe it's coming in the second half of the year. If February and March were slower, what does that mean for the rest of the spring and early summer? But I think fundamentally, we still have a fairly strong job market, right? We saw first-time unemployment claims actually go down a little bit today, so we're not, even though a lot of layoffs maybe are dominating the news sometimes, we're still seeing a strong job market for those that either have jobs that are looking to change. And I think that sense of security, at least today in jobs, it's what's helping that consumer confidence. So, I think that there's still a lot of talk about a slowdown in the second part of the year. There's a lot of, different numbers out there that suggest that's likely. But I feel like every time one of these data releases comes out, everyone holds their breath. And so far, there's usually something to be somewhat optimistic about, that even if we do have a recession, maybe it won't be as bad or as long as so many people have been fearing.
Lori, how much of this is driven by the Fed? Is the Fed the primary reason why we had this 1% growth? Because they have been trying to cool down the economy.
I think that the Fed's actions have certainly played a role in that, right? Because we've heard about, the higher interest rates and how that certainly affects, some markets directly, like housing, which is a big part of our economy. But I also think that we're still seeing inflation, right? Another measure of inflation came out today, still higher. So, we're all still spending more at the grocery store and different parts of our lives. So, the Fed's actions, I think, are certainly putting a drag on the economy, maybe not as much as they would hope. But at the same time, there's still these really strong fundamentals that in a way are define some of these actions the Fed keeps taking by raising interest rates. But again, if you're out there trying to get a mortgage, it's certainly so much more expensive for you now than it was, for example, last year.
Lori, I regret not listening to my mother and not getting a fixed rate mortgage a couple of years ago.
You did not?
No, I didn't.
Oh.
And I
always listen to mom.
Listen to your mother.
I know.
Always listen to mom.
One more question for you, Lori. What is driving consumer spending if interest rates are up so much and it makes more sense for people to leave their money in the bank?
It's true. I think that, some people still feel like they have excess savings from some of these stimulus programs over the past few years. And, I think that they feel somewhat confident about their household savings. I think a lot of people do still feel pretty confident in their job security. Even they think that their own companies are doing well and they see, a lot of help wanted signs in, companies around them. So they think even if they do lose their job, perhaps it wouldn't take them that long to find another. And so I think it's that confidence and optimism that's just continuing to propel the economy. And that's the thing, right? We talk about confidence is so hard to gauge and it could turn pretty quickly. But I think as long as, American households feel, somewhat secure, particularly in job security, we're going to continue to see a relatively strong economy. At least that's my hope.
Silver lining. Like to see it.
Silver linings always.
Lori Bettinger, thank
Thank
you so
you.
much.